Good day, everyone, and a warm welcome to Ester Industries Q4 and FY21 earnings call. We have with us today Mr. Arvind Singhania, the Chairman, and Mr. Pradeep Kumar Rustagi, the CFO. We will begin this call with opening remarks for the management, following which we will have the floor open for an interactive Q&A session. Before we begin, I would like to point out that some statements made in today's discussion may be forward-looking in nature, and a note of this effect was sent to you in the invite earlier. I would now like to invite Mr. Singhania to make his opening remarks. Over to you, Arvind.
Thanks, Gavin, and thank you everyone for joining us today. I hope all of you and your loved ones are safe and healthy. As mentioned by Gavin, I have alongside me Mr. Pradeep Rustagi, our CFO. I will begin the call with an overview of the key operational highlights across our businesses, post which Pradeep will walk you through our financial performance for the quarter. FY21 has been a historic year for us, a year wherein we have delivered our best financial performance till date, best in over a decade. Profitability was at an all-time high, with bulk of the contribution coming from our legacy business, namely film and engineering plastics. Specialty polymers, after a strong FY20 performance, had a relatively soft year, largely owing to COVID-related challenges, which impacted product offtake in FY21. We, however, did witness a strong revival improvement in the last quarter of FY21, which further leads us the confidence in believing that the next growth phase of the company will be largely driven by this business, while film business will continue to deliver healthy performance and engineering plastics will continue to make meaningful contributions to the bottom line of the company. Let me talk a bit more about the individual businesses, starting with specialty polymers business. As mentioned earlier, FY21 was a challenging year for the business, largely owing to COVID-19-led disruptions. As most of you may be aware, the business is largely export dependent, and given the COVID-related restrictions and lockdowns which were implemented during the year in some of our key markets, including USA, the demand and shipment activities had to face severe challenges. Performance of one of our key products, stain-resistant master batch, which is used in the carpet industry in the USA, was significantly impacted due to COVID-related restrictions. However, the situation has started to improve following the return to normalcy and the pickup of business activities in USA, which gives us the belief that we will be able to deliver a much better performance in FY22. We witnessed the positivity in Q4 FY21 itself. We saw substantial improvement in offtake of MP03. Demand for other products, namely innovative PVT, continued to remain solid throughout the year. We exported 1,042 metric tons in FY21 as against 465 metric tons during FY20. And we expect similar traction in volume to continue going ahead. Similarly, as mentioned in our previous call, our new product launches, LNC03, which is the low melt adhesive, finding applications in carpet industry, and cationic diable master batch MB16 and the deep diable master batch MB07, which find application in textile industry, have been positively received by clients. Commercial sales as well have commenced, and we expect from these products significant contribution to both top line and bottom line going forward. In addition to the above mentioned, we are also working on few other innovative products to keep the product pipeline healthy. Going ahead, we believe that as this business scales up, it will help enhance overall profitability profile of the company. Our efforts in recent times have been directed towards broadening our client base and product portfolio, which will enable us to grow the business at a steady pace. Moving on to the film business, the business continues to drive the bulk of the revenue and profitability momentum of the company, benefiting from the improved demand-supply dynamics. Steady realizations, margins, productivity enhancement, and higher proportion of value-added and specialty has positively contributed to the success of the business in recent years. The COVID-19 pandemic, in fact, has had positive impact on the economics of the business on the back of consumers' preference for packaged products for reasons of health, hygiene, and safety. Domestic demand, as I have been indicating, has been growing in the range of 11 to 13% annually. Demand from FMCG, pharmaceuticals continue to remain strong. We are confident that the same trend will continue going forward. Demand growth in the export market as well has been steady, though margins have softened in export markets in the just concluded quarter, as there is a time lag between movement in raw material prices and corresponding adjustment in sales realizations in export market. We, however, expect the spreads to remain healthy over short to medium term. As regards expansion of BOPET film capacity, we are on course in implementation of the project in the state of Telangana. We are hoping to complete the project by October 2022. Further, as regards to raising finances for the wholly owned subsidiary. We have taken advantage of benign interest rate environment globally and as such are raising certain amounts in euro-denominated term loan. Secondly, as I specified in the past as well, while growth is a priority for us, we will not over-leverage our balance sheet. The debt reduction we have undertaken in these recent years is a clear reflection of that. The funding for the new project has been structured judiciously with a mix of rupee and foreign denominated currency. The blended cost of the debt is much lower than what it would have been had we raised the debt entirely in local currency. The other initiative which we have been working on and I've been updating you all periodically as well has been the change in product mix. We have been working and are on track to meet our guidance of increasing the share of value-added products to 30% of total volume. Share of value-added products as of FY21 stood at 18%. The combination of higher scale and better product mix over the coming years should help us maintain the recent business momentum. At an overall level, we believe film business will continue to remain a key component of company's revenue and profitability progression. Lastly, engineering plastics business. FY21 has been a landmark year for this business. Despite starting on a soft note, it has delivered its best performance till date. Revenues and profitability have jumped multifold on the lack of strong demand from the end user industries and unprecedented margins. The business was going through challenging phase over the last couple of years. Strong auto demand following people's preference to travel in personal vehicles and demand growth in other application industries, coupled with pickup in optical fiber demand as work from home culture is gaining strong momentum, have all contributed positively. Rising trend in polymer prices as well as shortage of base polymers have resulted in higher sales realizations and unprecedented margin expansion, as can be seen from the financials. Further, as mentioned earlier, our strategy of relocating the plant to serve the customers more efficiently in a cost-effective manner and cut down on logistical expenses should help margin expansion by 200 basis points. Also, given that existing installed capacity has been fully utilized and there is reasonable demand growth, we are also contemplating an investment towards setting up a new extruder to help us meet the growing requirements of our domestic and overseas customers. Going ahead, we believe the momentum to sustain over the coming years and expect meaningful contribution from the business going forward. To conclude, we believe we are well positioned to deliver consistent growth and profitability and create value for all our stakeholders. All the businesses are well poised to embark on their next growth phase. We expect specialty polymer business to rebound and perform well in FY22. Film and engineering plastics business as well should maintain their recent momentum and deliver growth over the coming years. That concludes my opening remarks. I now hand over the floor to Pradeep to walk you through our financial performance. Thank you.
Good afternoon, everyone, and thank you for joining us today. I'll quickly walk you through our financial performance for the quarter and year ended March 31st, post which we can begin the Q&A session. Starting with the quarterly performance, revenue from operations stood at rupees 297 crore as against 254 crore reported during Q4 FY20, that is higher by 17%, while on a yearly basis, the same stood at rupees 992 crores as against 1,039 crores, lower by about 5%. The degrowth on an annual basis is largely owing to significant drop in chip sales, post-fire in primary heater on 19th March 20 and the COVID-19 related severe challenges we faced during the first half of the fiscal. The second half of the fiscal, though, has seen a sharp pickup across our businesses, which augurs well for FY22. Primary heater 5 has now been restored and we have resumed sales of chips from the month of March 21. EBITDA for the quarter stood at rupees 60 crore as against rupees 53 crore generated during Q4 FY20, higher by 13%, while on an annual basis the same stood at rupees 244 crores as against rupees 198 crore garnered during FY20, that is higher by 23%. While the growth was largely owing to solid performance of film and engineering plastics businesses, especially polymer business as well made a positive contribution towards the end of the financial year. Finance cost for the quarter stood at rupees 5.69 crore as against 4.84 crore outgo reported during Q4 FY20, higher by 18%. On an annual basis as well, the same declined by 24% to rupees 18.5 crores as against 24.4 crores. As of March 31st, 21, our outstanding interest-bearing term debt, net of free cash, stood at rupees 114 crore, while interest-bearing working capital liabilities stood at rupees 43 crores. Interest-bearing debt, net of free cash, as a multiple of annual EBITDA, it remained at a healthy level of 0.64 as of 31st March 21. We are committed towards maintaining better than prudent debt equity levels. We will not let go of the principles of prudent financial management and will not do anything to exert undue pressure on our balance sheet. As stated by CMD, as regard to raising finance for the wholly owned subsidiary, we are taking advantage of benign interest rate environment globally and as such are in process of raising certain amount in euro-denominated term loans. Depreciation for the quarter stood at steady at rupees 8.7 crores, while on a yearly basis the same stood at rupees 35.2 crores. Profit for the quarter stood at rupees 34 crore as against rupees 37 crore generated during Q4 FY20. Profit after tax for the quarter is lower than quarter ended March 20 as benefit of lower tax rate, that is 25.168% for computation of deferred tax liability was accounted for in the March 20 quarter. But for this, PAT for the March 20 would have been rupees 26.6 crore. On annual basis, the same stood at rupees 142 crores as against 100 crore reported during FY20, that is higher by 43%. To conclude, I would just like to reiterate that we are confident of all our businesses delivering consistent growth going forward. The fact that we were able to deliver a growth over FY20 despite Q1 being impacted by COVID-related challenges is reflective of the core strength of our businesses. With the macroeconomic environment getting better, we believe the coming years will be good for us. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sonal Kohli from Bowhead Investment. Please go ahead.
Hello, Mr. Singhania. Congratulations on your results. I have a couple of questions. Firstly, on the specialty polymer business.
Sir, this is the operator. I'm sorry to interrupt, but may I please request you to speak a bit louder, sir?
My apologies. Am I audible? Hello? Am I audible? So, I have a couple of questions. Firstly, on the specialty polymer business side, if you could give a sense of, how the outlook is in the first half of the year versus second half of the year. Do you think the US markets and auto business is opening up now fully and therefore...
Please speak louder. I can't hear you. Can you please speak louder?
Sure. Is it better now?
Yeah.
So as far as the US business is concerned, on the specialty polymer business side, we are seeing, US market opening up significantly in light of the fact that some of our products cater to the hotels, How do you see our first half of the year versus the second half of the year? And do you have any kind of order book, which makes you, confident about the business for 2020? This is my first question, then I'll ask the other ones later.
So, we saw a pickup in the specialty polymer business in the second half of FY21, and we recorded a turnover, Pradeep, correct me if I'm wrong, but turnover of 25 crores in Q4 of 21. Am I right, sir?
Yes, sir.
And going forward, this quarter also, we are seeing similar numbers. So for the whole year, I would imagine we should be looking at 110 plus crores of turnover compared to 59 crores in FY21.
Okay. And do you expect the second half to be stronger than the first half? As the market opens up over
I expect the second half to be stronger than the first half.
Okay. And, this number is lower than obviously, we had thought of, few quarters back. So is it because of the delayed opening of the US economy, and are the prospects for 2023 intact, or, you're talking about a 3-4 times increase in the business over a 2-3 year period. So are those prospects according to you still intact or something has changed we should know?
No, I think the U.S. economy will grow very strongly, and our indications for growing this business multifold over the next 3 to 4 years remains intact.
Sir, you mentioned about 110 crore revenue target for this year, but considering you already done 25 crores in Q4, and then you said the second half would be even better, and US market would obviously over next 1-2 quarters hopefully open up completely. What am I missing in between the numbers? Is 110 crore more of a conservative number because we don't know what could potentially happen?
I'm being a little conservative. I would like to perform better than I tell you, and I think we will. One of the things is that, one of our extruders, which remains uncommissioned since May last year, it was finally going to get commissioned in April, and then we had the second wave of COVID. That has again got delayed by a few months. So that is a bit of an impediment which is still standing in our way. So we are not sure when that will. If that has started up in April, we could have expected the turnover to be more like 140-150 crores.
So demand is not a problem. It's just that demand has been postponed according to you. It is the supply which is the problem from our side.
No, only on one product the supply is a problem.
Understood. And is that one of your key products?
No, that's a new product which we just started off. अभी तक हमने उसकी sale नहीं करी, only sampling करी है.
Okay. And sir, on the packaging business.
Haji?
Sorry, please go on.
Yeah. So this is a new product which we just started sampling, and we were hoping to start volume sales in May and June. But this equipment could not still be commissioned because of the second wave of COVID. The engineers had to come from Austria. And because of this COVID problem, again, they have postponed. Nobody's going to send their engineers in this situation existing in the country.
Sir, as far as the biotech business is concerned, would you expect it to come back to normalcy in the June to September quarter? I would presume that this quarter is going to be weak in general for the entire industry. Is that a fair assessment? And secondly, on the demand supply equation, would you think that supply side could get delayed by a couple of quarters for all capacities, considering many of them would require German engineers? This is for your business for you as well as for the industry.
So, if you're talking about BOPET film, capacity creation got delayed from last year to this year. The new capacities were supposed to start in September, October this year, but because of the second wave of COVID, we feel that this will get further delayed.
Okay. And sir, on the outlook of this business, is it fair to assume that the coming quarter should be, relatively weak because of obviously lockdowns everywhere, but from September quarter, would it come back to normalcy?
I would imagine June quarter will be impacted because of COVID in BOPET film. Specialty polymer will do fine. BOPET film and engineering plastics will get impacted in June quarter because of COVID, but from September quarter, God willing, COVID coming under control, September quarter should come back to full normalcy.
And sir, as far as the outlook on BOPET margins are concerned, would you expect them to improve compared to current rate as demand continues to grow and supply gets postponed? Any comments on that, and how do you see the next 12 months for you in that business?
Well, again, like I said, we have to wait for this COVID wave to subside. If this COVID wave subsides in the June quarter and normalcy returns, then September quarter we will see improvement in margins.
As compared to the Q4 quarter, is that what you're saying?
Yeah, compared to June quarter. June quarter has been impacted because of COVID.
Okay, thank you so much.
Thank you. The next question is from the line of Rahul Nankarni, individual investor. Please go ahead.
Yeah. You can hear me?
Yes.
Yes, sir, we can. Please
Yeah.
go ahead.
Yeah. My first question is in terms of, I was looking at the debt numbers. So there has been some amount of increase, about 10 odd crores increase in the term debt amount. Just wanted to understand where exactly is this term debt getting utilized, and what do you expect the peak debt levels as a consolidated group to be like in the next 12 months or so?
Pradeep, can you answer that, please?
Yeah. So we have taken term debt. It's a long-term source of fund that we have opted for. The funds that we have received will be used for capexes that we are undertaking within Ester in the following year, 21-22. On an overall basis, the term debt remains the same. The extra debt that we have taken, the rupee debt, has partly gone for reduction in the utilization of working capital limits and partly for capex. And as and when we pass time, we will spend this money on the capexes.
So is this a capex which is pertaining to the shifting of the engineering plastics plant also?
Yes, that is part of the capex.
That is part of the case. And by what time do we expect to complete this shifting of the plant for engineering plastics?
We'll be through with this by end of the financial year.
By end of financial. Okay. And the another question was on in terms of the fully owned subsidiary. There has been around 96 crores of capex, which is investment which is already being made into the entity. So, what kind of physical progress has the plant completed? If in some percentage terms, if you can give some number as to what is the sort of progress that is happening in terms of construction of that plant.
So the construction the activity is absolutely on schedule, on time. The expected startup is September, October next year. We are absolutely on time. Land development, land leveling and site development has been completed. Now we're just ready to start off the civil construction. So we are on schedule as far as the project is concerned.
Okay, so the land acquisition and land leveling, everything has been completed.
Yeah.
Okay. If you can just allow me one more question on the specialty polymers business. In one of the questions you answered that you expect around a turnover of 110 crores. So what would be the margins look like for FY22? It would be around the 30-35% level, or any guidance you would like to give on that? EBIT margins, yes.
35 to 40% EBIT margin.
35 to 40%.
Yes.
Okay. Thank you.
Thank you. The next question is from the line of N.M. Modi, individual investor. Please go ahead.
Yes, sir. Good evening. Sir, this implied cost has gone up from 54 crore to 68 crore.
Not audible.
Sorry, I couldn't answer the question.
No, my question was, sir, regarding implied cost, which has gone from 54 crore to 68 crore.
Yes. So may I answer?
Yes, please go ahead.
Yeah. So what happened that in the March quarter, we announced, we gave increment to the employees which was effective from 1st April 20, and the good performance, the reward for the good performance of 19-20 performance-linked incentive was also paid in this quarter, and we have also made a provision of PLI to the eligible employees for the performance of 2021 in this quarter. So there is an extra element of cost in this quarter which will get rationalized as we see the June quarter. It will come back to the normal levels in June.
Okay. Other thing, sir, this balance sheet is showing investment of rupees 9635 lakhs. So it is to subsidiary company, sir?
Absolutely. It is the amount invested into the subsidiary as equity. It is shown as such in the account.
Okay. Sir, my last question, sir. This special polymer division turnover is shown in which the segment, sir, in segment result?
It is part of the film segment because the segmental reporting requires that if the turnover is less than 10% of the company's turnover, that segment can be clubbed with the highest segment. But in the investor presentation, we have reported separate numbers for specialty polymer also.
Okay, sir. But here in segmental result, it is included into polyester chips and film.
Film business. Correct.
Oh, right, sir. Right. Thank you, sir. Shobhat. Thank you.
Thank you. The next question is from the line of Ravi Nanda, individual investor. Please go ahead.
Sir, I have a couple of questions. My first question is, what is the status of the product Ester HR03, hot filled PET?
There is no movement of that. It's not a viable product right now. It's not been sold for the last 4 or 5 years.
Okay. And sir, MB16 and MB07, you have said that commercial sales have started. So can we expect good sale in this year?
Yeah, we'll start selling good volume from this current financial year.
Sir, in last Concall you said that 150 crore you will then do in this specialty polymers and 400 crore for next year. But you are saying that you will only do 110 crore. What is the reason, sir?
I just explained that in the first question. One extruder which we were expecting to be commissioned in April has again got postponed because of COVID, because the engineers from Austria couldn't come. Last minute they had to cancel because of COVID.
Okay, thank you, sir.
Thank you. The next question is from the line of Pandurang Pandit, individual investor. Please go ahead.
Hello. Yeah, yes. See, most of the questions I wanted to ask have been asked by others. The only question I have left now is about how the oil prices, crude oil prices, are affecting our margins in domestic and export markets.
The crude oil prices I've always maintained before really don't have a direct impact because it's a pass-through model. The margins for polyester film are decided by demand-supply situation of the final product, which is polyester film. As far as specialty polymer business is concerned, there is absolutely no impact because our margins with the customers are fixed and we pass through the raw material. So really, there is no impact, no direct impact of crude oil or the raw material prices.
Okay, thank you so much.
Thank you. The next question is from the line of Pratap Makwana from Forbes Marshall. Please go ahead.
Good evening all, and many congratulations for commendable profit in the decade. I have 3 questions. So, what is the guidance of Q1 21, which is the current quarter, compared to the Q1 20? Are we expecting any dip or any rise compared to the lockdown was there in the last Q1 20 and currently the partial lockdown in Q1 21? My second question is, by when Telangana and Dahej revenue will be realized in the top line as well as bottom line? And my last question, being such a commendable profit in the decade so far, we should market in the better way while the advertising in the news agency, so that informed investor can take a better call in terms of the company's performance and the company's guidance. Thank you.
As far as guidance for Q1 of FY22 is concerned, there has been an impact of COVID. It's very difficult to assess what it will be because the quarter is not ended. We are in the middle of the quarter exactly. Depends on how COVID pans out over the next few weeks. But definitely there has been some impact. April wasn't so bad. We still managed to do quite decently well in April. But May and June, May has been impacted. June we have to wait and see. So it's very difficult for us to give you a guidance of what is going to happen exactly. In any case, we don't give a quarter-on-quarter guidance. As far as Telangana is concerned, we will start. We hope to commence production by September, October of 22. So revenue from that should start coming in by the third quarter of FY23.
He also asked about EP, sir, shifting of EP.
Oh yeah, EP shifting will finish by end of the financial year, and revenue is not going to change because we will continue to sell. There's going to be no reduction in revenue. In fact, after that, after first quarter of 23, we will start seeing improved revenue because new capacities will come in.
So logistic expenses will be reduced from the next year onward.
Yes.
And the last point on the marketing and advertising.
We have taken note of your suggestion, and we will look into it.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Namit Mehta from KC Capital. Please go ahead.
Hi, sir. Congratulations on a great quarter. Just a couple of questions from my side. One, if you can just help walk through the economics on the new capex, the 587 crores. How does that work in terms of the revenue potential and what we see in terms of return on that capital?
Pradeep?
You want the breakup of 587, how it will be spent on various elements of project cost, or?
No. Talking about how much revenue we'll get, what kind of returns we expect, so we can give him the project IRR and the revenue.
Yeah. So broadly, the turnover would be in the range of, when inflation is achieved, we can look at the turnover about 700 to 750 crores with EBITDA margins of 23 to 25%, and IRR would be about 17 to 18%.
Understood. Thanks. And is that the project IRR or is that the IRR on the equity portion?
No, it is the project IRR.
Got it. So presumably the IRR on our equity portion would be much higher.
IRR for the equity would be higher.
Got it. Great. And that's really helpful. And then the second part of that is, how different would this new plant be from our old plant in terms of efficiency, in terms of differences in machinery and so on?
So you may answer.
Chalk and cheese. Yeah, it's chalk and cheese. In our existing facility, our oldest line is only a 3.5 meter line which started in 1988. Second line is 6.5 meters, started in 97. Third line is 8 meters which started in 2011. This new line is 10.5 meters. So one line is going to give you equivalent production of 3 lines put together in Khatima. So the economies of scale, the state-of-the-art technology, the productivity, the output is going to be phenomenally higher. The costs are going to be phenomenally lower. So it's going to be a different ball game altogether.
Operating efficiency would be much better in this.
Understood. And would this new technology be used across all the new capacities coming up from all the different players as well? Or are is this state-of-the-art technology that we are using and we have some access to for some reason?
Well, I would imagine that I'm not sure exactly what width of line is going for and what technologies they're using. We are not privy to that. But I would imagine the technologies wouldn't be too far different from ours.
Got it. Thanks. And then last question from my side is on the BOPET prices. Can you just sort of walk us through what happened in terms of BOPET spreads over the past quarter and what you're seeing today as well? My guess is that we make more money when the spreads increase vis-a-vis just price increases as well. So if you can just touch upon that.
Hello?
Yeah, sorry, was I audible?
Hello? No.
Oh, sorry. So I was just asking if you can touch upon the BOPET spreads as well. My guess is that we make additional money when the spreads increase as well versus just price increases of both the supply as well as demand. So if you can just walk us through what's happened with the spreads and how that's impacted our margins.
What period are you looking at?
Just the past quarter and what's happening currently.
Pradeep, can you take them through, please?
Yeah, sir. So we're talking of 12 micron base film, commodity film. We're talking of the selling price, value addition, and raw material cost of that product. So in March quarter and December quarter, we got the same amount of value addition, though the raw material cost increased, but so we maintained the value additions at 46 rupees, both in December and March quarter. And currently, so the April was between the 41 to 44 range kind of number for 12 micron film, and currently we are about 35 rupees.
Great. Thanks so much and congratulations again.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, I missed your earlier commentary, so sorry for the sake of repetition also. Sir, firstly, sir, how is the industry placed in terms of utilization levels? And as I heard you, that the capex is also now coming up with a lag. So if you could give some more color on the BOPP film segment utilization level for the industry and our company as well. Yes, sir.
We are not on BOPP, so I cannot comment on that.
And on the BOPET fund, sir?
You see, BOPET, we have capacity utilizations are very high, but right now because of COVID, the capacity utilizations have fallen. But I don't have exact numbers right now. It will take me time to gather those numbers once the quarter is over.
Okay, sir. Sir, for us, what was the utilization levels for the last quarter and the year? Average utilization levels? We have executed
almost
full capacity. And sir, if we take the raw material basket, sir, how have the raw material prices behaved and how have they fared post March?
Prices have raw materials remained strong. In fact, have been pretty steady, but over the last few months they have gone strong. But right now they are remaining pretty steady. Am I right, Pradeep?
Yes, sir. After December, it started to rise from December, and March was very high, but now it's almost stable per kg of chips at about 71-73 rupees kind of range.
Okay. And the mix, sir, between PTA and MEG, what were the average prices for the March quarter and currently, sir, if you could give some more color?
So PTA prices for the March quarter was 56 rupees a kg, and MEG was about 48 rupees a kg, and the per kg of chips cost was about 64.5.
Right, and the prices currently, sir, ruling at?
The current PTA price is about 62 rupees. MEG is 53 rupees, and PTA MEG put together per kg of chips 71.
Okay, so MEG prices have moved up from 48 to 53.
Yes, MEG prices have gone up, and PTA prices also have gone up. If you look at the average of March.
Any reason, sir? Is it the demand led or any supply led? Hello.
Pardon?
Sir, is it supply led, demand led, or supply led difference, sir?
There was both. There was a shortage of PTA, and it was both supply and demand led. Demand for polyester products across the board, whether it was PET resin for bottle grade or textile grade or film, the demand for polyesters across the globe, across the product lines was very, very strong.
Okay, sir. And sir, I missed the last line. Come again, sir. Very sorry.
I'm saying that demand for polyesters across the board, whether it was bottle grade or textile or film, was very strong. So
okay, sir.
The even a shortage of PTA in end of December, early January, February.
Right, sir. And sir, currently, sir, what will be our cost of funds, sir? Average cost of fund, and sir, when is our rating review due, sir?
So last year in the month of August, we are now out with audited results. We will soon take up the matter with the rating agencies and ask for a review of the rating. Our average cost of debt last year was high at about, including the bank charges. Bank charges formed a very significant portion of borrowing costs, was about 11%. But at the current rate that we are getting, that's the average of the last year. Current we would be about 9%, less than 9%.
And the term loans, sir, which for the new projects, what were the rates at which it has been closed?
So there are two components to the term loan for the new project. One is the foreign currency, which is at about less than 2% per annum. The rupee debt would be less than 9%, and weighted average cost, including working capital, rupee term less than 5.5.
Right. And how much, sir, we have spent, sir? I missed the cash flow part. How much have we spent on the new facility, and what are we going to spend in the coming year?
Yeah. So 96 crore has already been invested and spent in the new company, and the balance that we need to do is about 80 crores, which we would do within the current financial year, 21-22, and some portion will be spent in the first half of 22-23.
Correct, sir. Right, sir. Thank you, sir. All the best, sir. Stay safe and speak again, sir. Thank you.
Thank you. The next question is from the line of Surendra B, individual investor. Please go ahead.
Hello.
Yeah, please go ahead.
Sir, congratulations for good set of results. My question is about this film plant capacity. Sir, our Khatima plant was established in 1988, or roughly back to, with the capacity of 57,000 tons. Whereas now the new plant is capacity is 48,000 tons at Telangana. If you see in normal course of industry, whenever the new companies are setting up expansion, the plant capacity is always higher, roughly by 50% or 100%. So I want to know what is the rationale behind this, your logic for this small plant capacity.
Small plant capacity? The line is one of the most highly productive lines and technology available.
But just let me speak about. Sir, the 57 is out of 3 production lines. The 48,000 would be out of 1 production line. So 57 has been built over a period of last 20 years by putting up different plants. And this is one single unit of production.
But sir, मेरा कहने का मतलब वही है कि आप अगर आप कोई भी कंपनी देखते हैं नया प्रोडक्शन, तो उनका कैपेसिटी हमेशा वो पहले प्लांट से डबल होता है या एटलीस्ट 50% ज़्यादा होता है. तो मेरा कहना है आप 1 लाख टन का कैपेसिटी का प्लांट क्यों नहीं डाल रहे हो?
अरे नहीं, इतना बड़ा, उसके 2 लाइनें डालनी पड़ेंगी. We have to be prudent in our expansion. ये थोड़ी ना कि कैपेसिटी हम बढ़ाते चले जाएंगे एकदम बेतहाशा.
1,200 crores.
From 57,000 tons, we are increasing by another almost 50,000 tons. So almost double कर रहे हैं कैपेसिटी अपनी.
ओके सर. दूसरा ये सर है कि आप जो इंजीनियरिंग प्लास्टिक जो प्लांट अभी हम लोग रीलोकेट कर रहे हैं, तो उसकी जगह हम लोग वेस्टर्न साइड में आप जो सोच रहे हो, तो वहाँ पे नया प्लान डालेंगे तो हम लोग पैन इंडिया सर्व कर पाएंगे इंस्टेड ऑफ रीलोकेशन. नहीं तो फिर वापस वो नॉर्थ इंडिया के लिए आपको ट्रांसपोर्टेशन कॉस्ट लगेगा.
बट हमारे सारे रॉ मटेरियल्स इंपोर्टेड होते हैं, तो हमारा वन वे कॉस्ट तो बढ़ जाएगा वहाँ पे लगाने के लिए. एंड हमारा नेट इंक्रीज इन EBITDA मार्जिन विल बी 2% जस्ट बाय रीलोकेशन.
Because currently out of the existing production, we are also selling in south, we are also selling in west, and we are also exporting.
Yeah.
So
net में ये फायदेमंद है to relocate. North is not a good location for engineering plastics.
Okay, sir. Thank you very good. Thank you for this.
Thank you.
Thank you. The next question is from the line of Sonal Kohli from Bowhead Investment. Please go ahead.
Sir, as far as your BOPET business is concerned, can you give a percentage of mix of revenues in December quarter and March quarter from exports? And what was the value addition in exports for you, for 12 micron, business? And how do you expect this to change over the course of next 1 or 2 quarters on the export side?
Yeah, I'll give the revenue numbers. Yeah, I'll give the revenue numbers for the film business from domestic and export for March and December. Just hold on for a minute. So in the just a minute. I'm looking at the wrong file. Just a minute. So December quarter in the 8 minutes. I'm looking at the wrong file. Just a minute. So exports in terms of value, December quarter was 50 crores, and in the March quarter, the exports of film has given us a turnover of 60 crores. So there is an increase of 10 crores in exports in the March quarter. The domestic sales last quarter was 122 crores, which has now increased to 131 crores. So overall, the revenue from film has gone up from 172 crores to 192 crores.
Sir, as far as your value addition is concerned, on the export side, how was it in December quarter versus March quarter? And, how would you expect that going forward? Is there any lag in exports between, the raw material increase and the price increase? Because your business, at least in the domestic market, is completely a delta business, and depending on demand and supply, you are able to pass through. Which could explain some dynamics about the export business and, how the value addition has varied across the 2 quarters, and how do you see an outlook or, whatever you are seeing right now?
So the value additions in domestic market in the quarter ended December and March were almost same. There was a drop in the export market because there was an increase in the raw material, and which could not be immediately passed on to in the export market, because there is a certain amount of time lag that is required for the adjustment in the selling prices. So there was a drop in the value additions in export market, but domestic market it was almost same as the December quarter.
And outlook for the export business, or would you expect a June quarter or a September quarter export business, value addition to be higher than what we saw in March quarter?
I would imagine September quarter to remain subdued, a little subdued, but September quarter will improve.
And sir, as far as specialty polymer business is concerned, do you have any outlook for 2023? I know it's a little far away, so we are not looking at a number, broadly a range what we could expect, because 2022 you said that at least for the first 1 or 2 quarters, you're going to lose certain revenues because of supply constraint on your side, not because of demand. So what would be your expectations for 2023 for specialty polymer? Even a range would do. We are not looking at a exact number.
No. I've already mentioned that in the beginning of the call with you, Sonal, that specialty polymer business will perform phenomenally better than FY21.
Sir, I was referring to 2023, not 22. 22 you already mentioned.
So 23 will be even better than 22, much better than 22.
So do you think you can grow at a 50% per annum kind of rate for next couple of years?
I think we might do better than 50% in 23 over 22.
And do you think the runway is long enough for you over next few years, next 3-4 years?
So I'm not able to hear you properly, Sonal. Your voice is very muffled.
I'm sorry. Am I audible to you?
Yeah.
So do you think the runway is long enough for you over next 3 to 5 years for your polymer business? It's not a 1-2 years, but more like a 5 years. The runway for growth.
The what? I'm sorry?
To grow over next 5 years.
I maintain that we are targeting over the next 3 to 5 years to be at 400 to 500 crores in this business.
You said 400 to 500? Did I hear you correctly?
Yeah.
Lastly, sir, at certain stage, would you be open to a possibility of a demerger? I know specialty polymer is currently quite small, but let's say 2-3 years down the line, considering the different kind of ROC, these kind of businesses command much better valuation. Did you ever think about this possibility, or it's a strict no for you, or you will be willing to relook at it few years down the line?
We're open to all possibilities. Whatever will give us the best option for evaluation, we will exercise those options. But we'll look at it at the right time. Right now is not the time to look at it.
Sure.
The business has to grow to a substantial size.
Great. Thank you, and all the best.
Thank you. The next question is from the line of Rahul Nandkarni, individual investor. Please go ahead.
Yeah, I had just a couple of questions on the engineering plastics business. Am I audible?
Yes, sir, you may go ahead.
Like you said, the margins were around 27% for your engineering plastics business in Q4, which is substantially high. So what do you think is a sustainable level for FY22, which we can look at from an engineering plastics business in terms of revenue as well as your EBIT margin targets for 22?
We were expecting very good numbers for FY22, but June quarter has definitely got impacted because of COVID. If COVID hadn't happened, we would have done phenomenally good numbers in FY22 as well. But we have to wait and see how June quarter first pans out and how soon COVID comes under control. If COVID comes under control in June, September quarter onwards, we should expect good margins again. So we have to. It's largely COVID connected.
Okay, so even if let's say by June things come under control, then should we expect at least FY21 revenue numbers to sustain for 22 as well?
I would imagine yes. Yes, if June comes under control, we should be able to come close to those numbers.
And the margins but margins of a similar level, around 20%.
Similar, I wouldn't say same, but similar levels, yeah.
Similar levels. Okay. And what is the kind of capex that we're incurring for this relocation of plant for engineering business? How much of it has already been incurred till date?
So about 36 crores is the capex. Very little has been spent right now. We just bought the land. The payment for the land is being made. So the money will really be spent now onwards over the next 12 months.
Okay, so 36 crores is the capex that you're incurring right now.
Including new capacity.
Including capacity, okay. This one for polyester films, just one question. There was a contribution of value-added products, which was mentioned that around 20% in for Q3, and for the full year it stands around 18%. Do you have a specific number for Q4? As in, how is it, just for a trend purpose, how are things shaping up?
Yeah, I'll give you the quarter by quarter number. So in the first quarter we did 15%. Then we increased. September quarter was 16%. Then in December it was 20%. And March we are at 21%. This is quantity, percentage of quantity of VAS products as percentage of the total quantity.
Okay. And in terms of value, it would be similar?
Pardon?
In terms of value also it would be similar? In terms of
value will be better.
Value would be higher. Value would be higher.
Okay, value will be higher because value added gives you better margins. Okay.
The value added product value will be higher.
Okay. And what was the expected levels of margins for the films business in general as a whole for FY22 that you're looking at in terms of EBIT margins?
We have to wait and see. Let's see how June quarter goes and how the COVID pans out. Very difficult to say.
Okay. But around 20, range bound it will be between 20 to 25%? Ballpark?
At least if COVID comes under control by June, yes, it's possible around 20-22%.
Okay. Thank you.
Thank you. The next question is from the line of Ashok Shah from LFC Securities. Please go ahead.
Thanks for taking my question. Sir, first question is promoter has increased the holding. So what is the future plan to increase the holding?
We'll see. Whenever we get the opportunity, we'll do it.
So you are still interested to increase the holding?
Yes.
Second question is, we are doing lots of capex over last 2 years and next 1 or 2 years. So we are paying interest of around 10% approximately. Whereas if we raise equity fund on a current price or current valuation of 1,000 crore market cap, and whatever fund is raised, then the cost of servicing the via dividend would be around less than 3%. So isn't it make sense to increase the equity rather than go for debt?
The cost of equity is always higher than the cost of debt, and we have a very prudent debt level. So we don't, particularly need to raise equity.
So for future expansion, we do not have any plan to raise the equity.
Whatever major expansions we have are on the plate right now. Beyond this, we don't have any major expansions on the plate. planned.
Okay. And what would be our dividend distribution policy? Is it same as current year and last year?
Yeah. So we have declared or recommended, the board has recommended a dividend, final dividend of about 1.9, Pradeep?
Yes, yes. 1 rupee 90 paisa per share.
Plus 1 rupee 50 paisa as interim.
Right. So this amounts to about a distribution of 20% of the profits.
Okay. And do we have any institutional investor in our company?
Nothing substantial.
Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Nitin Gandhi from KFL Trade Capital. Please go ahead.
Yeah, thanks for taking my question. So can you share some more thoughts on engineering plastic, new products, innovations and other things, or approval in pipelines, and what do you see the big triggers coming over next 12 to 18 months based on these approvals?
You're talking about engineering plastics?
Yeah.
Well, we had lots of products in the pipeline. I'm sorry, I don't have that data available to talk to you about it on hand. I mean, this is not normally a platform to discuss products and development. In any case, as far as the product development is concerned, it's very confidential, and we could not discuss it openly.
No, that's true. But like generally, the approval process is time, and big triggers comes only for the few approvals.
We have a very healthy pipeline of new products under development, so that's continuing, and it will continue in the future as well.
Right. Post expansion, relocation simultaneously, what will be our capacity for engineering plastics?
The capacity for engineering plastics will grow to about 20,000 tons. Am I right, Pradeep? 21,000?
Yes, sir.
Okay. And what are current utilization levels?
In engineering plastics, we are almost fully utilized, and that's the reason there's a need to have another extruder to serve the growing demand. We are almost fully utilized.
So the post-Australian visit, this extruder will go live, correct? So we can expect
this is for specialty polymer, not for engineering plastics.
Acha, okay. So this extrusion, which for engineering plastic, when we expect this to go live? Only after 12 months?
Yeah, in the new location.
Yeah, new location, correct. Yes. And will that help for some better margin or higher value products?
Of course, it will help us in broadening the product profile of the company.
Okay. Sir, you shared there's some 400 to 500 crore revenue possibility for in 3 to 5 years for specialty polymer. When do you say similar things for the engineering plastic?
Well, we are increasing capacity. Right now, we are fully sold out, except for June quarter because hit by COVID. And once the new capacity starts by end of this financial, we will start increasing our sales from that. So we should be growing at about 10 to 15% per annum on that.
That's pretty modest and very conservative, looks like, based on your past.
The industry is growing in single digits.
Right. Anyway, sir, I'll take you with some more discussion off the line. Thank you very much for your support.
Thank you.
Thank you. The next question is from the line of Arnav Kapoor from Individual Investor. Please go ahead.
Hi, sir. Good evening. Hope you and your family and Ester family is also doing well. I just a couple of questions. Most of them have been answered. You just right now mentioned that you're looking at 10 to 15% revenue growth on EP, more than 50% on SP business. Is there a similar number that you can give for also the film business?
Film business, we are constrained by capacity. So there won't be any major increase in film revenues until the new line starts up in October next year.
Right. Okay. And then on the SP level, you just mentioned that the extruder, couldn't happen because of the COVID situation. Can you give a number on what was the revenue that would have, that you've lost given this, given that has not been able to happen?
Well, we were expecting revenues of about 35-40 crores from this machine for the whole of FY22. Now, depending on when the machine will start up, that amount of revenue is lost.
Okay, so roughly we could assume that you would have hit like 150 crore. Basically, your guidance, you were saying 110 next year.
40 crores, 140 crores, 145 crores. But unfortunate that, this COVID came again and the engineers had to postpone their visit again.
Yeah, no, that's pretty unfortunate. And you gave the number 400 to 500. So if I do the math, it basically over the next 3 years, you should be able to hit 400, right? Easily.
Yeah. Correct.
Okay. That's our target. Yeah. Okay. Okay. Great. And one question on the SP business only. Can you share some color on the kind of, not on the kind of customer, on the number of customers that you have in this business, and what are the top 5 customers account for the revenue?
We don't have, this specialty polymer business is very different to commodity where you have, dozens of customers. Here you have a handful of customers. So each product may have maybe 2 or 3 customers.
Right. So are we making any more? Sorry. Go ahead, please.
Yeah. So we only have a handful of customers in specialty polymer business.
Okay. And any steps you're taking to increase those customers right now, maybe like given the COVID situation is becoming better in the US?
You see, like I said, each product has limited customer set. It's not. अगर एक प्रोडक्ट का ऐसे वास्ट कस्टमर बेस हो जाएगा तो कमोडिटी हो जाएगा ये.
No, fair enough. I'm just trying to understand, so like if what from a 5 to 10 year perspective, like how can you grow the customer base given that you earlier mentioned that you are trying to create a market for the SP business.
Here the market creation will be more from product development.
Right. Okay, sir. No, I think that's great. Thanks for all the insights, and wish you and the family all the very best. Thank you.
Thank you. The next question is from the line of Ravi Nanda, individual investor. Please go ahead.
Sir, MB16 और MB07 का भी सेम कस्टमर बेस है जो MB03 का है?
नहीं, separate set of customers.
तो
one goes for MB03 for carpet, MB16 and MB07 goes. Sorry, I'll correct myself. MB03 is carpet, MB07 is going for carpet also, MB16 is textile application.
ओके. तो सर MB16 और MB07 की कमर्शियल सेल स्टार्ट हो गई, तो आपको मतलब अभी क्या लग रहा है कि मतलब इसका क्या मतलब कस्टमर का क्या फीडबैक है इस बारे में?
It's very good. The customer feedback is very good.
तो सर इसकी सेल्स बढ़ सकती है इस ईयर में? कितनी बढ़ सकती है?
साल में अब सेल अच्छी चालू हो जाएगी.
ओके सर, थैंक यू सर.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Hello.
Yeah.
Thank you, sir, for the opportunity. Sir, firstly on this carpet part of the story, sir, we have also seen that one of the textile player, Welspun, has also set up this flooring part of story. So does the chemicals which the one which you have mentioned right now, MB03, are the for the same purpose and will be utilized by the same client? Is there any synergy with the same, sir? Welspun is coming up with huge capex on the carpet flooring segment.
I know, I'm aware of that, but I'm not sure whether they are going in for nylon 6 carpets or polyester carpets, because MB03 goes largely for nylon 6 only.
Okay, sir. And who are the end clients, sir? माने ये जो carpets जो end users के पास जाते हैं, who are the branded big players in this segment?
We have I can't name customers. We are under confidentiality, but the world's largest players are our customers in the carpet business.
Right, sir. Sir, in this plastic division part, sir, the type of turnaround which we have seen over just a quarter, sir, I missed the reasons, sir. What has attributed to it, and what likely are the reasons for the continuity also, sir? On a top line of 78 crore, we made PBT of 21.83 crore. So if you could elaborate.
these are exceptional numbers. I don't expect them to remain permanently.
Right, sir.
They may remain for a time and then they will settle down again.
But what were the reasons, sir? What were the reasons for the contribution and
supply chain disruption?
And sir, going forward, we are also putting up capacity in this segment also, sir. I missed your comment on the same.
Yeah, we are putting up a capacity, and because right now we are sold out and we will need more capacity because there is demand growth. Demand is growing in this segment also by 8-9%, and we hope to increase our sales by about 12 to 15% per annum.
Okay. And sir, what raw material goes into this segment, sir? The engineering plastic?
Nylon 6, PBT, ABS, polypropylene, host of raw materials are used here.
Correct, sir. And this will be in the western part of the country where you are relocating it. That is what the CapEx will also include. Sir, I missed your point. Hello.
In Gujarat.
In Gujarat. Right, sir. Okay, sir. If I had anything else, sir, we'll get back, sir. And all the best, sir, to the team, sir. And stay safe, sir. And hope for better times for everybody, sir, going forward. And nice speaking to you, sir. Thank you. Thank you, Rastogi. Thank you, Renewal. Thank you.
Thank you. Ladies and gentlemen, that's the last question for today. I would now like to hand the conference back to the management for closing comments.
Ladies and gentlemen, thank you for attending the earnings call for our company, and we look forward to seeing you again after the next quarter. Thank you very much.
Thank you.
Thank you.